Hey traders, welcome to another episode of Charts and Coffee. Hope everyone's doing well. Happy Tuesday, everyone. All right, so let's get to it. We have a pretty quiet, let me take y'all on over to the calendar here. We've got a pretty quiet calendar today in terms of data out of the US. You can see here, Tuesday, March 9. Unless you're trading the Australian dollar, the EWA country ETF, perhaps the FXA Aussie. We really don't have a lot affecting US markets or even the US dollar, but I'll be keeping an eye on that Aussie, 5 p.m. RBA Governor Lowe is speaking. And then we have the CPI and PPI out of China. Now remember, Australia's number one trading partner, who they export to the most, is China. So I'll be keeping an eye on that. Now that's more kind of an after hours, post-US kind of post-close kind of trading. It's, a lot of people will call it the pajama traders, things like that. It's simply after hours. Now we're talking about the Asian session, Auckland, Sydney, Tokyo, Hong Kong, Singapore, then rolling into Europe, then rolling into the UK, and finally back to the US again. So I do like trading after hours from time to time if there's going to be some sort of catalyst. And you can see here, especially with that 8:30 p.m., for me, the Asian markets are really getting going around 8 p.m. Eastern and not much before that. All right, so moving on then to just a little look ahead, right? After the Aussie's in play, I'm going to be looking at the Canadian dollar and the Canadian economy. And I'll tell you what, gang, a lot of traders tend to, I don't want to say forget, I think they just overlook the fact that you can trade the equity markets of other countries. It doesn't have to be about the Dow, the Russell, the NASDAQ, the S&P. I can take a look at the Canadian economy stocks. I can take a look at the Australian, the French, the Taiwan, the UK, and the same things that the US central bank is doing to help push stocks higher, aside from stimulus. We're seeing that very easy monetary policy all over the world. And that helps stocks regardless. So, think broadly. If you're not finding opportunities in the US stock market, be willing to look elsewhere and know that the central banks providing the kind of liquidity and the inexpensive borrowing that we're seeing in the US is propelling stocks everywhere, right? So keep that in mind. And it's always a good thing to sort of pick your head up and look at the commodities, look at the currencies, and look at the other ETFs of other countries. All right, so let's tackle some questions here. Oh yeah, so today we got the Viking Valhalla, and I am doing the Death Wish Valhalla today. Pretty good, a little milder than the regular Death Wish, but it packs a punch. So those of you that'll be joining me later on today in the futures room, in the options room, I'll be in the options room at 1:30 and also in Sector Secrets. Be prepared for caffeinated Raghee. All right, so let's get to it. Hey there, Aircon Gypsy. Let's go slay some dragons today. I love it. I don't know how many of you have heard me tell the story early on in my trading career. On Saturdays, I wouldn't know what to do with myself. And this was in my early to mid 20s. Saturday would roll around and this is, this would have been pre sort of real-time charting. This was end of day trading that I was doing mostly in the commodity markets. And Saturday would roll around and I'd sort of be bummed out. And we may not have been married at that time, but my now husband would be asking me, what's wrong? And I always tell him, I feel like a dragon with no dragons. I feel like a dragon slayer with no dragons to slay. So yeah, I love it. See, you're rocking some, went to McDonald's. Hey, whatever it takes. All right. Vish, do I think the Pitbull low is in, or is that strictly on the Thursday? So Vish, I would say when I'm looking at my calendar, which is always on my desk, I'm thinking that when I'm going to be expecting the Pitbull low to come in will be closer to mid to end week. So this is still the beginning of the week. Wednesday is about the earliest that I'll look for that. Tuesday is often considered turnaround Tuesday. So if we were to look at what's happening in equities, I wouldn't call yesterday a strong day. So turnaround Tuesday today, to me, what's the turnaround? We should be heading higher. See what happens. But as far as pit bull lows go, I'm thinking Wednesday, Thursday in terms of that pit bull low. And that might be a really good opportunity to scoop up some names going into next week. Absolutely. Would I buy, hey there, M, would I buy ARKK at these levels? Look, I think there's a lot of folks out there that are having a moment of schadenfreude with Cathie Wood. And most of them really, quite frankly, have no business doing it. I've heard everyone run their mouth off on her. And I think, look, it's like Jordan in the 90s. People just wanted to tear him down. Cathie Wood has been doing what she's been doing really well. It was not her fault or even her expectation that Tesla would go parabolic and absolutely berserk last year. She benefited from that, but that's not what her, she just didn't put all her chips in on Tesla and said, hey, this is what I'm doing this year. She's got a much broader approach, and she doesn't care at all with the likes of any of the chuckleheads. And I'm only talking CNBC. I'm sure everyone's been sort of running their mouths off, but I think people want to dismiss it. And you could look at things like ARK Watcher and even the ARK trading desk, and they'll tell you what they're in. Can we keep up? Oh gosh, no. I think some people think they can mirror what she's doing. Just buy the darn fund, right? And I like where your head's at because of that. ARKK. ARKK is sitting at the 200 EMA, and in a dip, Cathie Wood is the GOAT of buying dips. She's not a momentum player. She's going to find things on sale. She's going to have a longer term time horizon. And if things go on sale for the next quarter, she'll be scooping it up. She doesn't have to worry about, I think people made I think the outflows are more of a psychological thing. I mentioned the outflows because I think it's really important to know that panic was widespread when we were seeing that volatility the week and the week before that. So in no way was the outflow to me and any knock on Cathie Wood. She could care less. She's still going to be able to manage the way she does as the CIO and CEO of ARK. So that's a heck of a lead up, right? I think from a standard deviation perspective, this is the lowest we've seen the market since last March. So where we are right now, 200 EMA. Yeah, I feel pretty good about scooping out. Look, if you're playing ARK, you've also got to be playing a longer term, I think, time horizon. So if this is a place at which you think, I'd like to purchase ARK now at 106, not at 160. Yeah, at that 200 EMA, I think you've got a technical validity for doing that. Yeah, so I like where your head's at. Look at those pullbacks. Cathie Wood's buying pullbacks, and I don't mind buying pullbacks on Cathie Wood in any way, right? All right, Salesforce. Hey there, Tony. Take a look. And what do we have here? Tony, I know that Salesforce has a lot of weighting in a number of sectors that I watch, and of course in the broader ETFs. But the thing to remember, and I've got my Yoda shirt on. I'm the Trendalorian, right? The Trendalorian, and Trendalorians cannot trade or should not prioritize chop. And so while I don't want to short Salesforce necessarily, I don't want to buy it either. So I guess my question would be, is there another time frame where I can shorten the time frame, shorten the time horizon, and maybe look for some momentum north of 215 as a potential 1 hour time frame buy? Or maybe I'll shorten the time frame again and look for the 15-minute to organize a trend, or look for support at what looks to be a pretty decent little volume zone. So I'd have to shorten the time frame, shorten my time horizon in order to play Salesforce. And that's even if I've exhausted all the other trending markets, all the other trending opportunities. So I'd have to say no on that. But The zone that it's in is a pretty decent volume zone. It would be oversold, where we reverted to the mean of the V-score, which is that standard deviation of the volume weighted average price. Another thing you could add to that would be, we got this gap we've closed back in here, although it's been closed before. This is not the initial gap close. And I would put something like a slow stochastic, 21K 3D, or if you've got the Ready Aim Fire tool from Simpler, put that on there. Now, yellow markets are where you want to look for oversold buys, right? We've got earnings behind us, so that could be a really good combination there. All right. Okay, moving on then. So thank you for the question on CRM, Tony. Next up, hey there, George. What will be your strategy if you are taking 2/3 losses on each of your large and small accounts in this meltdown? 2/3 losses. 2/3. George, what do you mean 2/3 of the overall account? What would be my strategy? Well, stop, number one. I think last week, like everyone, people took losses. I mean, are there folks that are going to emerge and say that, they slayed the last couple of weeks? I think that's very much a small percentage, if anybody at all. Most folks that I know just sort of ran for cover, as we're supposed to do, got stopped out, as we're supposed to do, and did the most important thing when you're taking losses, which is, of course, being stopped out. But it's re-examining your watch list. I think one of the things that's underestimated in terms of importance in an environment where things have gotten very choppy, sloppy, unpredictable, volatile, is not just be open to being stopped out, because it's going to happen, but also remember that you want to re-examine your watch list and make sure that the names you're going into are still your relative outperformers, are not moving that far outside their typical price movement range, or have contracted back into their normal ranges, which makes placing stops and entries more predictable than when a market is moving outside its normal tendencies, normal characteristics. So, I mean, stop, reevaluate. I took a mindfulness class not all that long ago. Well, and actually, no, it seems like forever ago. And it was stop, take a breath, observe, and then proceed. Something like, I can't remember, but it was something like that. I always mix the stop up with the Richard Makowitz SEAL trading, Navy SEAL kind of trading book. I call it a trading book. I think it might have been Way of the Warrior or something like that. And it was something very similar, where you kind of stop, and then, so some people might say OODA loop, but yeah, just go into a process where you are stopping and then re-observing and then proceeding after looking at everything with a fresh set of eyes. That's what I would recommend. And I think for sure that, again, I think it's really important that someone on this side of the mic, this side of the camera, be straight up. The last couple weeks, I'm going to say it just straight up, sucked. Okay. Someone should say it was hard. It was, not because it was moving lower and not because it wasn't moving higher, but because the market was the volatility was the problem. I don't mind chop. I don't mind garden variety chop. I don't mind that kind of market, because you can find overbought and oversold ranges. But when we're moving beyond the typical normal price movement ranges, when we have broken volatility thresholds that were set with 6-month lookbacks, the reliability of support and the reliability of our indicators and the ability to place a proper stop and entry goes right down the drain. And that's what made it hard. It was the volatility, not the fact that we weren't just going straight up and that we weren't going straight down. It was that volatility. And it was hard. It was hard. So David, again, kind of going back to the Trendolorian, this is not a trending market. I do like some of the action that I'm seeing in the sectors that UPS is involved in, but UPS itself is sitting in a really thick layer of volume, and it's just really not going anywhere. So, of course, the trend that was, David, was up, right? No doubt about it. Before we went yellow, by the way, way the heck back in October of 2020, before we went yellow, we were green. which means that when I am looking for a long, a buy, I'm looking for a position in UPS, I'm looking for a long, I'm looking for a buy. Range-bound markets, I think, are really darn good for collecting premium, right? So when you see a yellow market, especially a prolonged yellow market with a defined range, I think collecting premium rather than a directional debit is really where you want to be. It's in terms of strategy. So thanks for the question, and that's what I would focus on. But if you don't want to collect premium, and it's not my go-to, right? It's not necessarily my go-to. But let's say you're already doing some of the collecting premium, but you want to throw in some directional debits, some directional plays here too. Focus on the bottom end of the range. Focus on the oversold end of the range. Focus on this area between these Darvis levels and the 200 EMA. Because I think if you're going to have a bounce, technical bounce, if you're going to have a move to the upside and be able to play directionally, buying calls in that range on the move lower into it is going to be the strategy that you want to deploy. So thank you for that. All right. So next up is, let's see here. Jeff B, do we need to sign up? Jeff B, the indicators that I have. I put the indicators in the room drives, these and a whole lot more for TOS, TradeStation, and TradingView. I put these in the futures room drive and the sector secrets room drive. Yes. So a lot of these custom indicators that I use, I put them in one of those two rooms because that's where I am and that's where I can support them best. So thanks for the question. Mal, good morning. How about the Euro US? Thanks for the currency question, because in the premium video for futures yesterday, which I cut every evening, that was definitely one of the topics. Where's my Euro US? So yeah, that was definitely one of the topics. And I know a lot of folks are wondering, when does the dollar re-weaken? And the scenario that I'm showing you guys right now, that was exactly what we talked about. I'm not saying, oh, look what I predicted. No. Technical bounce, 200 exponential moving average, down near the lows that if we were going to bounce from, makes perfect sense to bounce from. And until the euro bounces, it's going to be really difficult to get the overbought reading on the dollar index. Now, remember, the dollar index is, and you can look at, say, UUP, or you can look at the DX futures. However you want to look at it, the dollar index is going to pull back when the euro bounces. The euro is the largest traded market of any kind on earth. Nothing trades more than the euro. Nothing trades more than Forex, right? And the number one market in Forex is the euro versus US dollar. So that is the tightest, most negative correlation, meaning if one goes up, the other goes down, tick for tick, right? And the basket is 58% euro. Euro US is straight up euro US and no other currencies. So you want to take a look at that euro US, or you can look at the 6E for the bounce, because that's when, and really I'm not as interested in 6E as I am 6B and 6C. So this is what I set up last night in the premium video, explaining that we should be getting down to that euro, that gravitational pull to the 200 exponential. And then once we bounce off that, if, right, it's an if then. If we bounce, then we've got that zone of support in the pound and the Canadian dollar. So it's not so much a euro play. Now, ask yourself what the euro means to the dollar. Ask yourself what your outlook on the dollar is. Mine is still very, very much the short side. And then ask yourself then, what are the relative outperformers? What are the relative outperformers against the US dollar? And here is a 1 month look at relative performance versus the euro. And take a look at the only two currencies that are sitting to the left of the US dollar, stronger than the US dollar, Canadian dollar, British pound. And that's why we focus on relative outperformance when it comes to currencies. Currencies are not difficult. You can easily demystify them by simply asking yourself, what's the weakest currency? What's the strongest currency? And finding ways to match those up. That's really what you're looking for, those imbalances between relative strength. All right, gang, and just like that, wow, that went really quick. Really, let me touch on this really quick, Marty. Marty, I'm a huge fan, and I have been for my career, of some free, simple, classic indicators. MACD histograms, that's what I've got down here. I have a custom MACD histogram that I've used for decades. I actually also like to look at MACD histograms on different time frames. Again, it's a classic thing. It's a very simple classic thing you can find for free on a lot of platforms. I like a CCI, 20-period CCI. Now, 14s are pretty popular. I use a 20. And then I use also a slow stochastic. I slow that down, 21K 3D. So 20-period CCI, 12/26/9 MACD histogram. I don't care about the signal lines and all that. I just need the histogram. And a 21K 3D slow stochastic. And that's what the PB oscillator is. It's my ability to save some space, save some chart real estate, and put the readings of those indicators just as a label, as a trade flag on the chart. And that's what those are. All right. And those are available in the futures room jive and the sector secrets room jive. But I've given you the settings right there. That's what they are. I just make them convenient because I just need to know what their readings are. All right, gang, just like that, it's time to wrap up. Thanks as always for joining us for Charts and Coffee. We got a great crew that's logging in every morning. I love the questions. Keep them coming. I'll see you tomorrow, 9:20, same time, same station. Be good to each other, gang. I'll see you tomorrow.